Afternoon. How are we all doing? Internet's working at the moment. Hasn't gone down all day, the internet. Only this morning during the stream, twice. We're fine. Make sure the microphone's working as well. Everything's working. My God, did I have a go at Virgin after this morning. Morning, Diamond. Morning, Steve. David. Absugo. Morning. Virginia. Berlino. It is afternoon, rather. No one care. Steve. And the sound works, yeah. Afternoon, James. So basically, I phoned up Virgin this morning after the debacle of the internet going offline. Afternoon, Frederick. And the bloke went, yep, no problem, did all the tests as usual, got me to turn it off and on again because I know nothing about routers and plugs and stuff like that. And then he said, right, we'll do an investigation for the next 24 hours and we'll see and we'll monitor it. So I said, yep, fine, give you 24 hours, have a look at it. And then he said, oh, by the way, instead of 115 quid a month, we'll give it to you for 85 quid a month. And I was like, oh, that sounds brilliant. Okay, so you've cocked up, you've buggered up the internet, so you're going to give me a discount. And then he goes, so you've got a 14-day cooling off period. And I was like, whoa, hang on a minute. You're signing me up for a 2-year contract. I'm phoning you up because I've got a complaint. The internet's broken and you want to sign me up for 2 years at a cheaper price. So you're telling me I've been overpaying for the last 2 years by 35 quid a month and it's broken. And you want me to sign up for 2 years? Exactly what I said to Virgin this morning. I'm switching to Sky. Anyway, that was my morning. I'm not in a mood about it. It's gone. It's over my head. Afternoon, Stefan. Amar. The salt must flow. Okay. No idea what that means. Mr. DT, afternoon. Right, quick recap of the morning. Apart from Virgin. 1.12 banked. What's this? ADR reversals. ADR reversals banked 1.12. 0.97 yesterday. 5.3 for the month. Sitting in no drawdown, really. ADR reversals doing very well. H1 M5 mean reversion banked 0.64 this morning. Sitting in virtually no drawdown. 1.93 banked yesterday. 17.5 for the month. H4 M5 1.5 banked today. This morning. 1.8 yesterday. 13.4 for the month. Virtually no drawdown. Euro CAD. So the main thing is Euro CAD. There's only 2 trades on it. Canadian dollar has just rallied. So obviously this has come down further. So we're waiting for that to drive back up. H1 mean reversion sitting in 3.6. Euro US dollar is the only thing on there that's getting anywhere near 1% in drawdown. 3 positions on. So nothing to worry about there. Hopefully that CAD Swiss will be able to close out now. I'd like a little bit of a rally on the CAD Swiss just to get that one shut out because it's got 5 positions on. But that's banked 0.25 this morning, 1.79 yesterday, 20% for the month. So that's the results so far across the 4 strategies. All doing very well. ADRs today. Let's cover the news quickly. So there's no other news this afternoon apart from Lagarde speaking at 3 o'clock. We may get a little bit of movement off of that on the euro. We'll see, but that's the only news we got this afternoon. Other than that, the only thing you got to worry about is the wage price index tomorrow morning. That's the Australian dollar. Other unscripted news this morning. There's a little bit of ECB and a little bit of Fed talk, but nothing particularly drastic. So yeah, there was nothing else this morning that came out that I saw news-wise. So the CPI figures for the Canadian dollar are mixed. So we got a 0.2 hit on the CPI monthly, which is the core. The median and the trims came out as a miss and a hit. So they kind of cancel each other out. So it is slightly bullish Canadian dollar, which is why the CAD's rallied. Not very big, but it is up. Yeah, so there's more pressure on interest rates. Retail sales for the US dollar were a miss by 0.1, which is nothing. So it doesn't really make a lot of difference. So if we look at where we are with the key fundamentals, got 4 minutes to the open. The Canadian dollar sitting on 4.4 now with inflation, which means inflation has gone up quarter on quarter. So they're the first country now where inflation is coming down and it's slightly ticking up again. They stopped their interest rate rises and inflation has got the better of it and dragged it up again. So potential more interest rate rises on the cards for the Canadian dollar. They are 0.75 behind the US and the New Zealand, so there's room for movement there. Unemployment is still quite high, though, which is why they don't really want to increase that. So although that is an increase, and it does indicate potential requirement for more interest rate rises, which will be bullish Canadian dollar, doesn't mean it's going to happen. So this movement we've had on the CAD, we've had 2 hours of strength. If you look at the US dollar CAD, which I've got up here. So we had a rally into it with anticipation of interest rates either staying, inflation staying the same or rising. And then on the news, we had a rally, which has taken us beyond ADR and RSI. So there is an opportunity for a long there. I've got into this long on my Fidelcrest account. So I'm just taking a speculative long off of an RSI extension, looking to trade back into yesterday's low, really, or potentially up into there. So that's your news. Dow. We've got 2.5 minutes. Let's have a quick look at the Dow before the open. So at the moment with the Dow, we are very contracted for the last 3 days. So we are really not going anywhere at the moment. We're in a contraction on the Dow. So this movement today, we had a little gap down, filled the gap, dropped. We're sitting down at this monthly level here, which is what we tapped off of last Wednesday. We've tested it 3 times every day. Every day we've rejected it, but the bulls haven't managed to get control either. So we are really stuck. This could go absolutely anywhere today. Obviously, the previous week's low. So we got last week's low, then previous week's low, your downside targets, upside targets, anywhere really. Upside, I mean, I'd look at ADR really, and 125 ADR and last week's high. So really that much distance or that much distance could go absolutely anywhere today. So we'll see what happens at the open. Anyway, F-bomb Tuesdays. I didn't say the F-bomb. I said the F-bomb to the man on the phone when he said, would you like to buy my stuff? Here, I've got a load of crap product. Would you like to sign up for more of it? Unbelievable. The complaints department at an internet service provider should not try and sign you up. You're in a mood when you phone them, patronizing you by saying, I know it's crap, but do you want some more of it? Never going to work, Virgin. Did you bank on Aussie New Zealand shorts? Yes. Oot. Right, 30 seconds to the open. So on the Dow, your pre-market is there and there. Let's have a quick look at the NASDAQ as well. So NASDAQ 5-minute pre-market levels. 5 and 15 on the NASDAQ is exactly the same. It's exactly the same price action across the two. So both of these could do the same thing. We'll see where we go. There we go. There's your open. Afternoon, Crom. Pound US dollar, we'll have a look at that in a second. We'll do an analysis in a sec of the ADRs and RSIs. Wait for the market to just get going. David, I'm sending a message on the Telegram group. Could you give it a read and give me your thoughts? Oh, that's a long one. I'll have a look at that in a sec. To recap, targets in euro US dollar in long. I haven't looked at it yet. I can't really recap it because I haven't looked at it. I'll have a look at it in a sec. So your pre-market opening range break is short on the Dow, long on the NASDAQ. Fusion. Right, so very nice pre-market break on the NAS again. So if you took the 5, so if you took the 5, you've got 1R to the upside 15, you're on your way. That propulsion gap target is acting as a resistance. Dow out to the downside. So that's the propulsion gap target gone on the NASDAQ. That's 1R. So you should be break even on it. At least. And there's your 1.5R. So there's your 15-minute pre-market opening range break on the NASDAQ. That's 1.5R. Target hit. If you took the 5, you're more like that. So you're 2R. Where's Outro? He hasn't been in here lately, has he? Since he's been killing it and making an absolute fortune with the opening range breakout EA, he's not been in here. But anyway, that's the trade that he takes. Pre-market 515. And the Dow, not really going anywhere. It's stuck. The NASDAQ's obviously flying, so it's holding the Dow up at the minute. Afternoon, Baggy. Let's just have a quick look. At these pairs. Just wait for this candle. Just want to see what this Dow does. I want to see if this rallies out the highs. I've got a short on the Dow at the moment, which is why I'm watching it. So I took a short on the Dow yesterday. And my entry, I'm pretty much break even on it, actually. It's around about here. So as we rejected that high, I'm looking for a break of this low to drop down and retest last week's low, or previous week's low rather, down there, which is basically ADR. So that's the trade I've got on. So I'm just waiting to see if we get out the lows, but the NASDAQ's rallying like crazy. So I don't think we're going to at the moment. We'll see if this break on the NASDAQ is a false break or not. You're kidding me. It looks like the internet might be going again. All my charts are frozen. I'm still here, but the charts are frozen. Still on. Whoa, that was weird. Did anybody else get that? That was weird. It wasn't just me. That was this MT4, that MT4, and that MT4 all went at the same time. All froze. All platforms. There were 3 different brokers. That was really weird. It's like the market just suddenly froze for a minute there. I thought that was a connection going. Also, I was watching the connection status and it was like, I'm still connected. I'm just paranoid now. The internet's going to go all the time. See, look, we're frozen again. Let me just get the Dow up over here. One sec. This is Robo Forex. Looks like Robo Forex has got a bit of a feed issue. Yeah, it's Robo Forex. That's fine, as long as it's not the internet. I don't care. Right. Okay, so let's look at these other FX pairs. So there's your NASDAQ, your Dow, sorry. Whoa, look at that. Nasty gap. So there's your 5-minute opening range on the Dow. We did manage to break and hold that low. So let's see what happens when we pull back up inside the 5-minute opening range. If we can get that break to the downside, the NASDAQ will probably get dragged down with the Dow. So just watch the Dow. If the Dow drops, the NASDAQ will be a good short. Right, let's look at the pound US dollar. So pound US, who wanted to look at that? Amar? The moment we're bang in the middle, nowhere. So there's no opportunity on this at all at the minute. We are sideways, totally sideways. So the last entry was there, an exit was there. That was on that H1 RSI extension. 4-hour RSI extension, you have had a similar entry there and there, basically. So if you took that one, you would have taken that as a second and then exited there. So they're longs at the minute, the pounds. So the pound interest rates are going to go up again. We're in a bull run at the minute. The US dollar's fairly weak. We just had bad retail on it. So I'd be looking for longs on all of those pound pairs at the minute. But the entry was back here. So you've kind of missed it. Euro US dollar. Someone wanted to look at that one as well, didn't they? Who wanted to look at the Euro US dollar? Someone wanted to look at the Euro US dollar, didn't they? No. Someone said Euro US dollar. I'm sure they did. Was it Euro CAD? Anyway, Euro US dollar. Longs as well. Same thing. So I'm out of that one this morning on the Euro US dollar. That was that H1M5 there. That was also an ADR, I believe. 87, yeah, 87, 76 ADR. That was 87. So that was an ADR reversal or H1M5 mean reversion, whichever one you wanted to play. M5 reversal alert was down there. So I've got that break down there. So out of that one. But again, H1 bang in the middle. No real opportunity on that one. H4 coming out of a mean reversion. So if you wanted to take that and hold it longer term, I think there's a good chance that might actually break that high. Keep going on this trend, basically. Euro CAD. So Euro CAD is an H4 RSI. So that's nicely extended to the downside, just coming down to the monthly lows. So it looks good for a bounce. Obviously, the Canadian dollar has just had a little bit of a rally off the back of that news. So we'll test this area down here, I think, and then push back up into propulsion. If you look at it on the hourly, it looks a little bit more attractive from a propulsion gap perspective. So we got this nice drop, push back up, double top, propulsion gap on that accumulation break. And then we came down, accumulated and broke again. And since then, we just dropped down. So they're coming back up to test this area. But obviously, we just had decent Canadian dollar news. So that's obviously dropped. So wait for the bounce, trade it back up into there. H1's about to get extended. You are extended below the 30 level. It's about to get extended below the 25. And H4, you are extended below the 30 as well. So good looking opportunity for a long. Euro will power up at some point, but obviously the Canadian dollar has just powered up, so that's stronger. We'll have a look, afternoon Fletch, at the ADRs and mean reversions, and I'll have a look at what you put in there, David. So RSIs, Dow is out the lows on the 5 minute. NASDAQ likely pulling back with it. So NASDAQ's starting to pull back as well. So this is the previous days, this dotted line here. That is yesterday's high, which we came up into and tested, rejected, tested, rejected, third test. Likely to drop. We'll see what happens. So RSIs. We've got ADRs. We've got two ADRs today, Aussie dollar CAD and the pound CAD. Obviously, off the back of the news, Aussie dollar CAD has just put a reversal alert in on M5. So there's your reversal alert. And that's at ADR, almost 125 ADR. Depending on your broker, you might already have it. That push down has also taken us extended below the 30 level on the RSI. So this is a real mess, this Aussie dollar CAD at the moment. We had the news here, which obviously drove the Aussie up against the Canadian dollar. Since then, it's just been an expanding mess of price action. It's absolutely all over the place. So what they've done is they've dragged it straight back down to origin of that move. And we're now sitting obviously down at 125. So if you look at where we are from a support resistance perspective, we've got the last month's low. We've got 2 week ago low, 3 week ago low, all in the same place at 125 ADR. So I've got a long on this, which I've just put on. We've come down quite hard into this area, bounced off of it a couple of times, tried to push up and rejected. So this third bounce, if it holds, likely we're going to get a rally back up to the top of this range. If this doesn't hold, we'll be coming back down towards probably this high here. Yeah. Which is going to be 2 or 3 ADR down to there. So there's a propulsion gap down there. We've got this low as well. So if you look at this whole area here, have I got, no, I haven't. This is going to draw a horrible rectangle. What happened there? Oh no. There we go. Rectangle. I haven't tidied this up. So this is going to draw a horrible color because I haven't actually changed this since I installed this terminal. So this area here is what I would be interested in to the downside. Let's go with, it's like a propulsion gap, doesn't it? Let's change that. Gold. So if you drag that back and look at this area here, basically, we bounced off of it, came back, rejected, pushed up, bounced, 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 bounced. That's where I'd expect to drop to if we are going to reject this, if we're not going to reject this low. So looking at this area here, it's monthly, multiple weekly bounce point, likely to bounce back up into the range. If not, then you'll be scaling in down to there, wait for a bounce somewhere down there. We're extended on the 4 hourly already. So if you look at the previous extensions, we get down to this sort of level on the 4 hour. It's where we tend to get our bounces from. And there as well. So highly expecting a bounce down here, but we'll wait and see. It is coming off the lows at the moment, but it hasn't actually tested this area. So somewhere around this area, I would expect some kind of movement. So scaling in with the first position. If it pulls up into there, I'm out, done. If it pushes down, I'll try and get a second on. If not, then we'll have to manage it as a position if it breaks that support. So that is one. You've got the pound CAD as well. That's also an ADR hit today. Your reversal alert on that one is just about to go in now. So that's your reversal alert there. Just about to trigger. Obviously, if you're taking an ADR reversal, this is ADR, you're looking for somewhere around about a third to a half an ADR. So from where we're going entry-wise here, you're looking somewhere about 48 pips being half an ADR, which is there. That's that propulsion gap. That's half an ADR, third of an ADR, somewhere in there. So quick scalp. H1, not quite extended yet. H4, we are extended. So it's also an H4 M5 mean reversion. So you're extended there. So this 5-minute reversal alert is going to be your entry if you're trading the H4 strategy as well. If you're trading H4 M15, you're not going to get in until all the way back up there, which is one of the reasons I've switched over to H4 M5 instead of H4 M15. Instances like this, you've got a whole ADR of movement, which is like 96 pips in this case, before you even get told there's a reversal in structure. M5, you get the reversal in structure now. There you go, just triggered. So you're in. So pound CAD, long. So that's a nice H4 M5 entry. EA would have taken that one for me. So those are your ADRs. We've now got a monthly hit as well. The first one of the month, it's Euro CAD. So Euro CAD, nicely extended. Dow's pushing back up again. Completely undone. So it wants to go the same way as the NAS, but we're sitting up here where we've rejected multiple times. So we'll see where we go from there. Tricky open today. So yeah, Euro CAD, very extended on the monthly. So if we look at that one, beginning of the month is there. So that's your monthly high. that is now your monthly range on the Euro CAD hit. So we're on the 15th of the month. We've done 100% of our normal monthly movement. So there's a nice mean reversion opportunity there. So this is looking good for that monthly low as well. If you scale out a little bit, have a look. This is the previous month's low. And then you've got the month before low down there with these propulsion gaps. So again, it's very similar to that one. If we are going to bounce, we're probably going to bounce from somewhere around here. We've rejected that area 3 times, slammed through it on the news. So once now everybody's gone short, their stops are up there. So there's a reason to go up to the highs and obviously take that liquidity up there as well. There's obviously that propulsion gap. So from here, we're either going to go back up into there or we're going to drop down into here and then get a bounce down here somewhere for a pullback up. So nice looking entry here. Drop down, wait for the reversal alert. M5 or M15, whichever you want to play. You're just about to get one shortly on that. M15, miles away. Oh no, it's not. It's not drawn properly. There we go. So M15 is there as well. And your hourly, you'll be looking all the way back up the top. So again, 3/4, half an ADR, something like that. So really good opportunity for an entry long on that one. We're extended on the 4 hour as well. So that's a good entry EuroCAD monthly range hit. So there's your ADRs and monthlies and weeklies. There's nothing hit on the weekly yet. RSI extensions, Aussie dollar CAD at the moment is extended. That's the only one we've got to look at. So if you look at the hourly and 4 hourly, Aussie dollar CAD, we've already looked at this. It's an ADR hit, extended on the hourly and extended on the 4 hourly. So when these candles close in 3 hours, you're going to see a lot more RSIs light up off the back of this. So we've just looked at some of those, like the Euro pairs. Which one was it? Euro CAD, wasn't it? So Euro CAD, as you can see, that is now extended on the 4 hour. So when this candle closes on the 4 hour, that will trigger an alert on the RSI dash to go and have a look at that one as well. So there are some opportunities out there on RSIs and ADRs today. So go and have a look at those. Let's have a quick look at this NAS and see what the NAS is up to as well. Wow, NAS has gone out the highs. Dow, look at this, Dow. What a mess today. Horrible. I like it though, when it's come back down. ADR, H1, AC, currently in for a long. Yeah, we've covered that one, haven't we? Marco, afternoon. Waiting to long US dollar CAD. Yeah, US dollar CAD. ADR would be a good spot to get it long on that because you haven't got far to go back down for a potential second entry at last week's low. So looks good. US dollars just had negative retail figures and Canadian dollars just had positive inflation though. So it's got potential for a bigger drop than that. I would wait for that to get more extended. Ideally. But yeah, it could go anytime, obviously. We never know when it's going to go. That's the whole purpose of position trading. You can't time the market. Just get in. You like the setup? Get in. Deal with it afterwards. Right, so US dollar, Dow, we're back inside the 5-minute opening range. So we've, oh my God, wow, look at that. This is volatile today, very volatile. So basically from the pre-market, we've broken to the downside, broken to the upside, broken back down into the middle. Now we're breaking the downside again. This thing's all over the place today. One of the reasons it's good to take these 5 minutes. These 5-minute pre-markets are fantastic. 5 and 10, 15-minute pre-markets. Because you literally, you're out and you're done. That's it. It either works or it doesn't. So, crazy. Okay, so Dow's outside the lows. We've just tested and slammed straight through yesterday's low. Next target is previous day's low, which is coming up down here. Oh yeah. So previous day's low, obviously, is Friday. Yeah, of course it is. Which is last week's low. As your next target. So we're going to get limit orders triggering here as they try and buy up the lows of yesterday, same way as we sell the highs of yesterday. So we'll see if these sellers have got enough juice to get through this level, but this is whippy as hell today. Nasty. Don't know what to do about mixed news today on the US dollar CAD. Yeah, so that US dollar CAD, you're trading, if you're longing this, you're trading against the fundamentals basically. So the fundamentals have just told you that the retail figures for the US dollar are negative and the Canadian inflation is positive, which is bullish CAD, negative US. So that doesn't mean that you can't mean revert it. Obviously, that's the whole purpose. Every time we get a big, strong move in one direction, they profit take that move. That's what we do. We work on their profit take. So there's no, for me, I need it below the 25. I want to get really extended. That means I'm going to go into low drawdown, usually. It's not extended enough for me, but if I saw an ADR hit on that, I'd get in. But right now it's not going far enough. The news wasn't strong enough today. So these retail figures today, if you look at them, core is what you're interested in, which is core. That's core CPI. They don't put the word core in front of it, but that is the core CPI. That's a 0.5. Yeah. And we got a 0.4. So it's a 0.1 deviation, which is virtually nothing. So it's not as if we've got, oh my God, we missed by 1.5% on retail. We missed by a micro. It's not really going to make a massive difference. The CPI figures, they were forecasting stability. They got slight increase. And this is only month on month, not quarter on quarter. However, the quarterly figures are also a 0.1 up as well. So that is, for the Canadian dollar, something I think will probably be fairly strong moving forward. If you look at oil as well for the CAD, we've got this situation on oil where we're stuck. So if we get a rally on oil, we get a rally on CAD. If we get a potential Canadian interest rate rise sort of whiff coming through the market as well, you've got positive inflation coupled with positive oil movement, coupled with the Bank of Canada saying they're going to increase interest rates. The CAD's going nowhere but up for the next month. So just got to be careful with inflation. The whole market, and this is why we have these key fundamentals on the website, the whole market is driven at the moment by this. This is what is making everything move, every currency, because the world is in a rush to get on top of this so they can stop doing that and drive these forward. All the time this is going up, they have no choice but to do this. There's nothing else in the central bank's arsenal at the moment apart from interest rates. That's really all they've got to deal with. And we've been on negative and zero interest rates and low interest rates for such a long time. They've really got to rally this to get this inflation down. So as soon as this starts going up, I guarantee you Bank of Canada is going to come out and look for a 0.25 plus on the next rate rise because they can't let this get out of control. They've got this starting to come down. If they take the foot off the gas and it starts to go up again, it means they've got to increase this at twice the rate. That's the last thing they want to do because everybody's going to get unemployed. GDP is going to drop and go into recession and it all goes wrong. So it's a real fine balancing up. I'd be very surprised if we don't get the Bank of Canada coming out soon and saying, in light of current inflation figures, interest rates are probably going to be risen in June. So we'll see what happens with oil. That's going to be one of the key drivers for the CAD. As you can see, oil's come down, CAD's come down. So again, there's lots of factors going into that US dollar CAD that could turn into a squeeze. So just be a little careful with it. I'd just wait. Get in. There's plenty of stuff that's going to signal. You don't have to get into stuff just because it's getting close. Get in when it's ready. Dow has broken the lows of the day. And we've just taken out yesterday's low. But the limits are triggered and they are holding at the lows. So we'll see. If we break that low, you haven't got far to go down to there. And then you're going to find some more limits trigger at last week's low. really tough for these markets to get out of these ranges at the moment. Really tough. Really struggling. Whoops, wrong one. Really struggling to make any progress in any direction at the minute. Afternoon, Marco. Waiting for long US dollar CAD. I've just read that one. Tim, just taking some profits on the CAD yen longs. Good job. Didn't have any longs on the CAD yen, but bug wiki. Yeah, very bug wiki over there. New Zealand dollar, US dollar. I just want to read David's thing in a minute. Hang on a sec. New Zealand dollar, US dollar. Do you consider using the US department somehow? US department? What's that? Department of what? New Zealand dollar, US dollar, bang in the middle of nowhere at the moment. I had longs on this one, which I'm out of. So out there yesterday off of that H1 mean reversion. And obviously that short there off of that H1 mean reversion. So yeah, nothing on that. Upside potential obviously is all there. Look, there's loads of it, the upside. So I'd be going long more than short, but for me, that the entries were there and I'm out. So 4 hour, you're coming out of an extension. You've missed it basically. You've missed it. Department equals borrowing. You mean the Fed? I don't know. I don't know. I mean, I just look at the fundamentals basically. Virginia DAX. Oh, very nice. So DAX is coming down nicely. But again, look at the DAX. We played the gap fill this morning. Perfect. The gap fill yesterday. Perfect. Not so good. But again, we're going to struggle here. We really need this market to rally and drive hard in one direction or the other. It's just got no legs at the minute. So as much as I love the DAX back down to the gap fill here, it's just not able to get anywhere. So DAX looks like a nice short, but probably tomorrow back down into there. So we're holding now. Look at this. I mean, it's just such a nasty thing that straight up into that double top. Since then, we've got 1, 2, 3, 4, 5, 6, 7, 8 days. We haven't gone anywhere. Look at ADR. ADR high, ADR low. In that whole 8-day range, yeah, we've only hit ADR low once. Things not moving. It's just stuck. We are stuck. It's almost like we're in summer trading. Very weird. Dow's having a go at the lows again. Oh, debt, not department. Sorry, debt equals borrowing. You've spelt debt wrong. Derp. You spelt debt wrong. Debt isn't got a P in it. It's got a B in it. No wonder I misunderstood you. Debt is short for department. US debt, borrowing. Yeah, well, it's all related basically. But yeah, I don't pay any attention to the debt now. Not as much. Basically, with the debt thing. Yes, I know you, Joe. I'm only taking the mickey. With the debt crisis in the US at the moment, it will be what it will be. It will either get sorted or it won't. We'll deal with it when we deal with it. There's nothing you can do. You can't forecast it. They're forecast to default sometime between the beginning to the end of June at the moment. They were forecast to default sometime before the beginning of June, i.e. sometime in May. That's been pushed back. They could get bailed out by themselves, by someone else. There's all sorts of things that can happen. But either way, it's not going to be good for the US dollar. So, but things, if the US does default, one of two things is going to happen. the US dollar is going to collapse very fast, very hard. You're going to get multiple ADR hits, and it's going to come down like a house of cards. If that happens and you've got longs on the US dollar, you're going to scale out of them. Or it's going to come down and be weak like that for weeks, in which case then you can mean revert all the way. If you worry all the time about, I'm not going to take any longs on something because something might happen, i.e. with the Japanese, for example, I keep saying there's a strong chance of an intervention from the yen. I would rather be shorting the yen than longing it. I've been longing the crap out of the yen. I'm worried about it, but you can't stop trading because something may or may not happen. If you worry about, there's a housing bubble at the moment. The housing market could all collapse soon. There's all sorts of stuff that could happen. If you worry about everything, you won't take any trades. And we take trades with such small risk that if I went long on the US dollar CAD and we had a 5 ADR push against me, I'm going to be in something like 3% of drawdown. I will get out and I'll take a hit. Look at the strategies. Yeah, the whole premise of position trading is to use your account balance as risk. That is what your account is. Your account is risk. Your drawdown is risk. It's unrealized profit. So take this one, for example. We've banked 20% this month on H1 hedging set file. Yeah. H4 mean reversions banked 14. H1's banked 17. This is trading all instruments, obviously. So it's had extra risk on than it would normally. If the US dollar long, we haven't got any long. I'm just trying to find, let's see, as an example. That's got US dollar short on. That's got US dollar long. So let's say we're on this one, US dollar, we've got US dollar CAD long, right? Let's say US suddenly defaults. So this thing drops 5 ADR. That $200 or 0.14 is going to turn into something like 3 to 4% in drawdown. Shut it. What have I lost? 4% of the account. It's made 5% this month. Yeah. So when you get a massive issue like some huge problem that causes a massive move that is completely unusual, you've been building up for this event. So yes, you're going to take a hit on it, but it's not going to be as big a hit because of the lot sizing we use. When you're risking 0.25% of your account on a half of an ADR movement and something moves 3 ADR against you, you're going into 2.5% drawdown. Most people risk 1% on a trade. So what? Not the end of the world. And you've got time to do something about it. This is why we look at exposure. If you're exposed 5 times long on the US dollar and that happens, it's going to hurt big style, which is why we try and limit our exposures to entries. Yeah. So I wouldn't worry too much about it. The debt problem. It's a problem. Something is probably going to go bad, but equally, knowing the US, they'll figure it out. At the end of the day, they probably print more money, which means that they're going to get themselves into a little bit more trouble for a little bit longer, but it won't be quite as bad. There's always ways out of stuff. That's what the Fed's there for. Quite often what they do is start a war. Yeah. They start a war. It takes the interest away from the debt crisis, and they make money. When there's a war on, wars make money. And we've got all sorts of stuff going on in Russia at the moment, haven't we? So, there's always ways out of these things by the Fed. But if you're in several US dollar pairs in the hedge EA, so if you're hedging, you're going to get into more danger. But the hedging set files are no different to any other. If you have higher exposure on like the hedging set file, if you are trading every single pair on the hedging set file, you are going to get into more drawdown. Yeah. So there's 4 short on that at the moment. That's trading obviously every pair. So yeah, you would, which is why you limit your exposure again. But hedging, if you've got hedging, if you're running the hedging set files across 3 or 4 different pairs, for example, there's a possibility you could get into 4 in one direction on one currency, in which case you need to shut some of it out, aren't you? You'll know about it after it happens. There's nothing you can do. You know, it's just one of those things. Dow is coming off the yesterday's low, pushing back up into propulsion. So we'll see if this level here holds. So propulsion gap fill, and then possibly a next leg down. But yeah, like I say, this is part of this sort of what we're talking about, is part of the kind of analysis paralysis kind of thing. You see people that have all these indicators on their charts. So they'll have 3 different oscillators down here. They'll have multiple moving averages and ribbons and all sorts of things on there. They'll have lines drawn here, there, and everywhere. When you're looking at a chart like that, you can't decide what to do, because there's always one other thing telling you the opposite. So you've got 3 oscillators on there. 2 of them are telling you to go long. The other one hasn't given you a signal yet. So you'll be going, oh, that looks like a good long, but that one's not really there. And we're not at a level that's good, and we're not quite close enough to that moving average. If you worry about all the news events that could possibly happen, like, oh my God, what's going to happen with the wage price index tomorrow? I won't take any Australian trades just in case. You'll never take a trade. Get in, get out. Make sure your risk is small enough that you couldn't give a monkeys. If you have a black swan event, nothing's going to save you anyway. If you put a stop loss in place, it won't get honored. So don't worry about it. Trust me, I've been through many of them. Comes back to what you said yesterday. Look for the obvious. Yeah, look for the obvious. If it doesn't stand out, like oh my God, like that Aussie dollar CAD I've just taken along, yeah, it looks brilliant. Why? Because we're extended beyond ADR, we're extended on the RSI, and we're at an obvious support. I've no idea if this is going to go up or down. I haven't got a clue. But what I do know is I've got 0.25% risk on, and if this thing drops by an ADR, I'm in 0.5% of drawdown. Do I care? The whole purpose of position trading and what I teach in the bootcamp is that you should have absolutely no problem hitting that button in either direction at any point, blindfolded, flipping a coin, and not care. If you hit that button and you're like, as soon as you hit that button, you're like, not sure if that's right or not, you've got too much leverage on. If it worries you to hit the button, you've got too much on. If you hit the button and you don't care, like if I go like 0.02 now and go buy, I couldn't care what happens. That should be how you should feel when you take a trade. You shouldn't worry about anything. Like I said, you have a 50-50 shot. When you press the button long now, it's either going to go up there or it's going to go down there. If it goes up there, I'm going to get out. And it's literally just, I'm not even going to think about it. I'm not even going to get out. The EA is going to get me out, and it's going to move the money over to there. I don't even know. I don't even know what this is here. Look. This 0.64% today, I have no idea what that is. No idea what about. I don't even look at it. I'm focused on this. And if the US dollar has a problem and all of a sudden this comes 2.4%, I'll deal with it. Otherwise, I'm not interested. I sit here, you know, I go through every session on here and go, this is banked this much, there's nothing in drawdown. Next, this is banked this much, there's nothing in drawdown. Next, that's what your job is. Is anything getting into a trouble? No. Otherwise, just carry on moving as normal. Don't worry about the trouble. The trouble will hit you at some point. Deal with the trouble when you get trouble. Dow's just broken the lows of the day and yesterday's low. So we're off to the previous lows, which is last week's low, which is here. That's the next trigger point. If that breaks, we are off. So that's an ADR here. If this level breaks and holds, we're off to ADR, which is 2 week ago's low. If that breaks, we've got a clear run back down into this balance, that propulsion. If you look at the DAX, I would imagine it's doing the same thing. Yeah, so we're short, heading back down to potentially that propulsion gap. So again, just playing the ranges at the moment. Every time I get a disconnect, I'm panicking, thinking the internet's gone. Very quick move down there. So watching this level, we're testing this level now. So this is the limit orders trigger, and you can see it like jittery down there. Yeah. So this is the sellers hitting hard, wanting to go short, and this is all the limit orders triggering at that previous week's low. So market places orders at yesterday's low, previous day's low, last week's high, last week's low. This is where the market buys and sells. This is why the market turns at these levels. So you're seeing the limit orders triggering now. So the sellers are selling into this area and the buyers are all triggering their orders wanting to go long. Someone's going to have bigger, deeper pockets than the other one, and they're the ones that are going to win. Right, let me just read David's thing. I'm attempting to maximize profits with the H1M5 strategy. What I have been testing is aiming for a TP on my initial position of 1 ADR. I'm trading with the higher time frame trend, but after half an ADR in my favor, I will take a trade that is half my initial positions in the opposite direction. I also place my initial trade at break even and a stop loss on my hedge trade of half an ADR, or where my TP of my initial position is. This would allow me to gain a bit more profits if price continues in my favor, or to be profitable still if price comes back to my initial break-even point. So if you are short now, what you're saying is your target is 1 ADR down here somewhere, wherever it may be, but half an ADR, you place a hedge in the opposite direction. So what you're doing is you're slowing your rate of profit by getting in the opposite way. And if it goes back that way, you will make money on that one and potentially break even on that. Why wouldn't you just close your short and take all the money? Sounds like you're completely overcomplicating something very simple. And I have to ask the question, what do you need to maximize? Is that not enough return? I don't know. It doesn't make sense to me what you're saying. You take half of your initial position in the opposite direction. You're just, all you're doing is if you're so you're in New Zealand right now. I'm short. Target for me is 1 ADR, which is 156. So it's there basically. That is pretty much target for me. Well, it's not. A half an ADR is for me, but that would be your target. So what you're saying is when we get down to half an ADR, somewhere like this, you'll move your stops to break even and go long. So all that's going to happen is you've got half as much lot size going long. So if that happens, you make half as much money as if you just closed that position in the first place. I don't see how that could possibly increase your profits. Surely that just means you break even on what you could have taken and you make half as much on the return journey. And if it went down like that, i.e. like that, there, and hit your target, all you're going to be is in drawdown on something which could accumulate and drop, which means you've then got to scale back in the opposite direction. Doesn't make sense to me, but test it. I've never got on with hedging. Every time I try to hedge, I have tried to hedge in the past. I went through a phase of weeks. We've just broken the lows on the Dow, last week's low. So we are at last week's low, testing now. Next stop, 2-week low, ADR. I spent probably 6 months, I would say, developing a hedging strategy around position trading. And a way to, instead of doing drawdown control, to hedge out of the position instead of doing drawdown control. All I got into was a mess, because every time you are in a position in one direction, like I'm short on the Dow now, yeah. I'm in $800, $700 a profit on this short, 0.25%. Target for me is 0.5%, which is $1,500, right? So I want to get out of $1,500. If I was to take a long here, in case we get a bounce and move break even, what's likely to happen is I'm going to go up, break even on my short, yeah. And if I don't exit that position and it drops down to where I thought it was going, all I've got to do now is manage that hedge long. So I've made nothing, and now I'm stuck in 2 positions long. Yeah, I know hedging works. I know some people can do it. I just find the logic of hedging so much more complicated than drawdown control. Drawdown control, I'm happy just to take some loss. Just give me some loss. I'll take a third of my position off, make my P&L smaller, but keep my life simple. I don't want to have to worry about trying to manage 2 sets of positions in different directions. It just makes life complicated. This is complicated enough. And I don't know anybody that hedges at all, apart from Nick Shawn. Did you see the mess he got into last week? Enough said. Don't know. That is enough to return. The set file is great. I can't surpass the 5% daily, so I have to pick and choose a couple of pairs. I would gain a bit more profits if the move continues in my direction. You wouldn't though, would you? If you're saying that you would go short, let's say you had a short there, and you're down here, your target's there, right? Your break even's there. If you go long here and it moves down into your direction, you're stuck with a long position. You've got to scale out of manage as a position. So when you get to there, your overall profit is smaller than it would have been if you hadn't taken the hedge in the first place. Or am I misunderstanding? If you hit a long there, if you've got 2 shorts on, by the time you get down to there, let's say that's 1%. If you put that long on there, by the time it gets down to there, you're only going to get 0.6 because this one's going to be in drawdown. And you're going to have to close the whole lot. Or, like I said, you manage that one. And if you're trading H1 M5 mean reversion, let's say you got in there long, right? And then you took a short here and your target was there. You're getting in short here with no reason. You're getting in short just because you fancy it. There's no technical reason to get in there. The market's not extended. There's no reason for it to pull back. The whole purpose of the H1 mean reversion strategy is exhaustion, profit take move. If you're going long on it because of the exhaustion profit take move and it's playing out and you decide to take a short just in case, why? Doesn't make sense. Kind of breaks the strategy. Afternoon, John. The hedge would be half the risk of your initial trade. If price continues, I will still make more profits. You won't though. Well, yeah. If you don't take the hedge off with it, yeah. So if you go short there and your target's there, right? And then it comes down to here and you go long there. By the time that gets down to there, if you don't close that long out, you will have made the same amount of money as if you hadn't have taken that in the first place, except you wouldn't have the headache of having to deal with that later. You see what I mean? He's just making it more complicated and hard for you to get out. What if this thing tanks down to here now? That trade, you've now got to scale out of it. You've got to do something to get rid of that trade, haven't you? Or you close out that short, and that long down here, and you take a loss on that one and profit on those two. Why take that loss? Just take that profit. Trust me, I think I know what you're trying to do. I've tried it for 15 years. I haven't managed to make it work. I can't do it. Just wait for the market to give you the money. Yeah, the position trading strategy is designed to wait for the market to give you the money. The market just does this. You don't know when it's going to do that. You don't know when it's going to do that. So get in and wait for it to get to a positive point and then bank it, whatever it may be. Yeah. This account here that I'm running at the moment. Yeah. This has all been taken totally manual. None of this is 0.5%, 1%, can't type percent, or whatever. It's basically, it's in profit. I'm going to stick it over there. There's no logic in it. It's a case of I've got into the market. I think the Dow's coming down. The Dow's coming down. I'll bank it. I should be waiting for 0.5%, but I want the money. If I start to overcomplicate, my life just becomes hard work. Trading becomes very hard work. I spent a long time developing this, the market reversal alerts indicator, to show signs of strength, and finding a condition indicator that works well with market structure. I couldn't squeeze any more profit out of it. The point is, I don't want to make a fortune. I want to be consistent for 12 months so that I can live. I don't want to try and squeeze 5% more profit. I want to be making money all the time. That's it. If you're trying to look for more, I would say up your risk. Take more drawdown. That's the best way to do it. Or get twice as much money and double your risk, rather than trying to find another way to squeeze money out of the market. Don't forget, the market goes up, the market goes down, it moves through time. There is absolutely no way of forecasting that movement. It's random. So when the market is moving in your favor and you go, just in case I'm going to take that way, the odds of that trade working are exactly the same as the odds of that continuing down to your target. That's my thoughts on it. Stop loss would be placed on the hedge at half an ADR to where the TP is on the initial trade. So exactly. So what you're doing is you're taking a loss. So rather than your trade, see, listen, I don't think I'm misunderstanding it, but what you're saying is I'm going short, or I'm going short here and I'm going short again, and then it's moving in my favor. My target is down here. But what I'm going to do is I'm going to place a trade long there with a stop loss roughly where my target is, so that I take a loss on the trade that hits my target. Totally illogical. What you're doing is you're taking some of your profit away, aren't you? Or am I misunderstanding? Do you see what I mean? I'm confused about it. I couldn't trade it, so I don't know. So you never. So John, so do you never trade if it's not extended? No. Watch the bootcamp, John. Links going along the bottom. All my strategies up on the website for position trading. But you're right. The way we have been doing works just fine. I'm not saying it doesn't. I just see I get into trades, take profits at half an ADR, and at times price continues. Yeah, it does. So yeah, again, coming back to the, it's right or wrong. I don't know. I've been trying to crack this thing for 15 years. I couldn't crack it. I couldn't find a strategy that works. No strategy works that I could find. I've tried a lot of them. The conclusion that I have come to after trading this thing and watching this thing move up and down for 15 years is that I know it does that and that and that. That's all I can come to the conclusion of. Every strategy that I have found that has an edge always comes back to around about 50%. Yeah. So you find a strategy and it says it's got a 60% strike rate. When you back test it in reality and trade it for years, it's roughly 50% of the time it's right. So what you're really looking at is a positive R return. As long as it's got a 1.1 R, you will make money on a 50% strategy, right? So that's the conclusion I came to. It doesn't matter what strategy you use, you will be at the mercy of where the market goes next. And that isn't something you can predict. We spend our entire life trying to find a strategy that can predict where that is going next. You can't. You can't do it. So all you need to do is get in and wait for the market to move in your direction. We know it goes up and down. That's a certain. We can see it. I can go back in history for decades and I can see it has a structure to it. It moves in waves up and down. And we've got things that show us where it's likely to head next. Yeah. But we have no way of telling which way it's really going to go or when it's going to go anywhere. So the easiest thing to do is to wait for a condition to come up that we know has repeated itself over and over and over again in the past, like an RSI extension, a Bollinger Band break, a support resistance level bounce, something, doesn't matter, pick it, anything, stochastic, MACD, CCI, doesn't matter, anything you like, just pick something and wait for that condition to be met. Get in the market with an amount that's small enough so that if it goes really, really wrong, you couldn't give a monkeys, and wait for the market to do what it's done for 100 years, which is go up and down. You can't tell when it's going to do it. And if you think I'm going to go like that just because it's a possibility of something happening, your edge is the same as if you didn't do that. It's 50%. There's a million ways to make money in this thing. Everybody's trying to do it by putting a stop loss in the market that guarantees they don't make money. That's the only thing I've discovered that doesn't work in this market. Everything else works. Bollinger Bands work, stochastic works, CCI works, support resistance works, market structure works, smart money concepts work, trading randomly with a coin at the beginning of the day works. 3 upward candles in a trot with a short works. A 3-bar reversal works. All of it works 50% of the time. Doesn't matter how you get in. It's just about place a trade. If it works, take the money. If it doesn't work, get in and wait for it to take the money. That's it. That's the only thing I've found out that works in this industry. Consistently, and I'm talking consistently, I can have a massive, give me the Dow, right, over a 10-day period and pick any 10 days at random. I can flip a coin and get it right 7 out of 10. Probably won't do the next time. I might get 1 out of 10 the next time, but I will always have the ability to get it right a certain amount of times. And if you concentrate too much on the micro movements of it, you will always get lost. Like, oh my God, the Canadian dollar has driven down the US dollar today. What should I do? Well, go long because it's come down. What happens after it comes down? It goes up. How do you know that? Because that's what it always does. Look back on your chart and show me a time where it's come down and hasn't gone up again. It doesn't exist. Came down, went up, came down, went up, went up, came down, went up, came down, went up, coming down, it's going to go up next. All you've got to do is survive the down before the up on whatever time frame you're trading. So if you go down and it's going your way, take the money off the table. Don't try and go long just in case something else happens. It just will get you into a mess, a confused mess. If you only ever traded a 90 RSI extension on the 4-hour chart and never ever traded anything but that in your entire life, I can guarantee you would have a 100% strike rate and never lose a penny. You just can't wait for that. I can't wait for that. No one can, because you'd hardly get any entries, but those entries are 100% guaranteed. Look, there's one there. 100% strike rate on the Dow. But are you happy to take one trade a year? Probably not. But consistency comes with identifying conditions which repeat themselves over and over again. You just got to find one that happens enough without confusing it and overcomplicating it. And there's always this thing. There's a guy called No Nonsense Forex, YouTube channel, really good. he teaches about ATR. He uses ATR as his stop loss, but he uses a stop loss, right? But he uses the stop loss based on the average true range of the time frame you're trading, which is as close to my ADR as you can get. So I like it. But what his teachings are all about, VP, that's his name, Armand, yeah. What his teachings are all about is eliminating loss, right? And finding an indicator that makes a benefit, but using indicators that are different so that you have different market conditions. A bit like this video I've got about what is a strategy. It consists of a condition indicator to tell you when the market is doing a thing. It consists of a signal indicator to tell you that there's something changing that might signal an entry. It needs a stop area where the trade becomes invalid. For me, it doesn't get me out, it gets me back in again. And it has a target where it's going. We need to know where we're going if we're going to get in, because if you haven't got a target, how are you going to know which way to go? Yeah. So there's things that go into it, and his videos are really, really good at explaining how to put a system or a strategy together. But again, he uses a stop loss. So the strike rates, everybody's trying to find a system. They're all great, the systems that people have cobbled together using his teachings, but they all stop out. Then people go, that one doesn't work. Right, let's try it with the RSI. That works. Oh, it didn't work. Let's try it with a stochastic. And what you do is you end up in this cycle of testing strategies all your life. You will never make money. Remove the stop. Simplify it. Instantly you make money. Yeah. Like I said, like I said, I haven't said it for a while, but I've been in live rooms in the past where I've basically said, pick an instrument, pick a time frame, pick a direction. 3 different people pick something. I press the button. Yeah, we come back tomorrow and I've made money. Not because any other reason than whenever I hit that button, at some point it will go into profit and I can take it. You just have to wait. And the simpler you make it, the easier it is. There's a high probability on this time frame, not that one. Let's pick something else where we can actually see one. Oh my God. There we go. There's a high probability that this is going to go up to there. There's a high probability that this is going to go down to there. Those are the only 2 things I need to know. Where's it going? It's going up there or it's going down there. Flip a coin. Go long or go short. That's as simple as it needs to be, right? I am in the pound odd long or short. So whenever someone comes to you in a Telegram group or a Discord channel and says, what's your thoughts on the pound odd? You can say, I'm long. Why are you long? It looks more long to me than short. But what's the reason? Well, I don't know. I'll just get out of it when I get into profit. Watch their faces go. That is as simple as trading is. It doesn't need to be any more complicated than that. You just use a minimal risk that means you're not going to get into pain or trouble very, very quickly. And if the market goes absolutely crazy like that, deal with it. If you got into this here and you had to scale in, look at the pound New Zealand. Not there, a bit further back. Yeah, got in there. Totally wrong. Look at me. I got in short. It went nothing but long after I got in short. Did I make money on all that? Yeah. I shorted it all the way. I was wrong from the 1st of March until the 25th of April. I was totally wrong on the direction of the pound New Zealand, yet I made money on every single one of that move. I didn't lose money. Look, I got in, I got in, I got in, I got in, I got out. I got in, I got in, I got out. I got in, I got in, I got in, I got out. They're all profitable trades. I took a couple of longs along the way as well. But I didn't overcomplicate it. I just went, I think this looks like a long because of that. And I just dealt with that. If you try and get a position on the other way because you think you're wrong, when you are right, you've got to deal with your wrong. All you're doing is you're making yourself twice as vulnerable to market movement. And admittedly, yes, one of those will work because it has to go up, it has to go down. So at least one of them is going to hit your target. But you're always going to be dealing with one that is wrong. I would rather just sit here and be right the vast majority of the time and only have to deal with the wrong ones when they occur, not force myself to have a wrong one every time I enter a trade, which is why I don't like the hedging set file. Because the hedging set file, when you look at it, it's going to be wrong. I can guarantee it's wrong on that. 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 The only thing it's probably going to be right on is the US dollar, because it doesn't matter which way this goes, because I've got longs and shorts on it, some of those are going to be wrong. If it drives up the pound, yeah, I've got 2 shorts that are going to go into drawdown, which I've got to deal with later. That's why I don't like it. You're always wrong. This is never going to go green, because by the very nature of hedging, you can't go green. You're always going to be in drawdown, but you're always going to bank a lot. Every strategy's got a plus and a minus, and it's all about finding the one that fits your psyche. And if you think hedging is right, then do it. But otherwise, don't. But anyway, there you go. That's my thoughts on it, David. It's a possible, but I think it's more of a probable pain in the backside. John, what level? 75.25? Yes, so H1 I use 75.25 RSI. Those are the levels I use at the moment, but I will change them if the market conditions change. I've just moved back to 75.25 from 70.30 because the market was very contracted. It's now starting to wake up a little bit. Well, I say that, it's now going back to sleep again. But always in, always banking, EMAC, exactly. Thanks for videos. Just finished them over the last few days. Cool. Given that I'm not going to put a stop loss in place, I'm struggling on how much lot size to put on, as the stop loss is how I used to get my risk. You can still do that. So if I have $10,000, for instance, how do I know what lot size to start with? So you still do that, Gavin. So you just use an indicator or a calculator to enter the market. So the way that I personally do it is when I get into a trade, the stop loss is placed half an ADR away, and the risk on the trade is 0.25%. Yeah. So I'm risking 0.25% if the market pushes half an ADR. That's my lot size. So use a calculator to do that. There's one here. So on this one, I've got an indicator on here called, you can go and Google this. I think it's in the files section in the Telegram group, actually. Money Manager Graphic Tool. If you go and Google that, yeah. If I hit the S button now, for example, yeah, it will bring up a tool, which basically I can now calculate lot size. So the half an ADR on this is 2253. So basically, if I drag my stop loss, which is this red line, 2253 away, is there, something 2330. Yeah, it tells me I need to use 28.25 lots to risk 0.25% on my account. So it's exactly the same. You just place the trade. You just don't place the stop loss. Your calculation can be the same. Or if you want to use a really simple calculation, if you use the market reversal alerts EA, it does it all for you. Yeah, the MRA EA it auto calculates lot size. You don't have to worry about it. But if you want to use a really simple way, as taught in the bootcamp, if you risk 0.01 per $1,000 in your account, that's really low risk. If you risk 0.02 per $1,000 in your account, that's a bit higher risk, and upwards from there. So if you've got a $5,000 account, I wouldn't go more than 0.05 to 0.01 per entry. But as you say, the pip count or the monetary risk per pip is different on each instrument. So ideally, you want to try and calculate it accurately. But that's what I built the EA for. The EA just does it all. Don't need to worry about it. Afternoon, Neo. This is like a shortened version of the bootcamp. Yeah, there you go. I've been trying to condense the bootcamp into half an hour. I can't do it. So there you go. You got a condensed version of the bootcamp. But if you think about it, it wasn't really a condensed version of the bootcamp, was it? It was just logic. Yeah, everybody in this room that just heard me saying that probably knows exactly it's right. Yeah, there is no strategy out there that teaches you that works enough to make you want to stick with it. This is the problem. This is why I built I made the system hopping video, because all I did was identify what I'm doing. I stopped trading after I blew another account. And I looked at what I was doing and thought, why is none of this working? I've been doing this for 8 years, 10 years, or however long it was, and nothing's working. Other people are making this work. What am I doing wrong? And I looked at all the strategies and they all work on paper. But in reality, when you press the button, this is the thing that blows, not your strategy, you. So the only reason you go tilt is because you lose money. You stop yourself losing money, you stop yourself going tilt. All of a sudden you start making money. That's the conclusion I came to. And when I looked around at the people that are making money, banks, institutions, hedge funds, prop desks, pension funds, none of them uses a stop loss. I talked to my guy in the bank who works in the bank. He used to work on a market maker desk. He used to work on the commercial desk and he worked on the prop desk. Never used a stop loss. Never lost money. All of a sudden the penny dropped. Hang on a minute. We're losing money because we're taught to put an order in the market to lose money. Let me try this strategy again without that. That was the light bulb. There you go. That was the boot camp in 5 minutes. Morning Forex pips. Are all these profits from algo trading? Yes. David, leave yourself a runner if you're concerned about price continuing in your direction, e.g. bank profit at half an ADR or profit target and leave a percentage on or allow to run. Yeah, I mean, there's an argument for, I mean, I use trailing stops a lot. If you've got, I haven't got anything with 2 positions on. I can't really, literally haven't got any trades on with 2 positions at the minute that are usable examples. EuroCAD maybe. So EuroCAD has got 3 positions on as buys. So we've got that one there, and that one there. So the average is, I don't know where the average is. The average. Yeah, so the average is there. So when this gets up to there, target on it is half an ADR, which is going to be 12, 50, 60 pips-ish. So target is going to be roughly around about there. So when this thing gets there, what you can do is close that. Yeah. And you're above break even on those 2. So you could basically put a little stop loss there, which means you take a small loss on these 2 and let that run if you wanted to. There's no right or wrong. Your job is to bank money and make your P&L green. How you do it is entirely up to you. You can only do it when stuff goes green. Whether you bank it all or part of it when it goes green, I've had many an instance. Again, I haven't got one I can show you. Here you go. So CAD Swiss right now. Yeah, these are all longs. So this is all one position long. Yeah, it's sitting in 0.6. It's break even basically, CAD Swiss. Stick that over there and close that out. And take $360. Yeah, and leave these 3 running, but put a stop loss on them at $200. So the very worst case scenario is you're going to make $160. Yeah, if it pulls back and stops you out, that's the very, very worst thing that can possibly happen to you. Best thing is those 3 rally for 2 to 3 days and suddenly becomes 4%. Yeah, you can do that. The EA can't do it. This is something that human beings have to interact with. And you try, it might work, it might not. Worst case scenario, you're going to put more green over there. Best case scenario, you're going to put a shed load more green over there. I'm the type of person that likes things green all the time. So I bank at 0.5%. Other people in Telegram are sending me their P&Ls. They're banking way more than I am. But they're taking a hell of a lot more risk than I am. Some people are holding things for 3 to 5%. fantastic, well done. I haven't got the psychology to do that, so I don't. But you know, there's no right or wrong. This is what I teach in the bootcamp. You can't have do this then do that in this industry, because this thing will never repeat itself again. The situation we're in on the pound New Zealand right here, right now, isn't going to repeat itself ever again. It's going to be different. The next time we get a pullback like this, it's going to be a different one, and you're going to have a different situation. There's no two trades that are ever the same. So how can you possibly predict what to do? How can any system or strategy say, get in here with a stop loss at there and make sure your risk reward is 1.7 return on your risk? How do you know it's ever going to hit 1.7? If it hit 1.7 20 times in the past, what tells you it's going to do it again in the future? You can't. That's why strategies in back testing are never repeatable in forward testing, because those conditions you tested on won't ever happen again. None of this here is exactly the same trades as those. Never will be. So you have to stop trying to put yourself into a box and make a strategy. You have to hit the button and wait and then deal with the result. Once you know what you've got to happen, you can deal with it. If you try and predict what's going to happen, you're going to freeze and never know what to do, are you? And you're going to be scared about getting it wrong. If I go short on this now and it goes up, I don't panic about it being wrong. I look at where I'm going to get in again. Because if it goes up, it's going to come down, because it always goes down and comes up and goes down and comes up and goes down and then goes up and then it comes down and it goes up and down and up and down and up and down. No idea which of it's going to do. So don't worry about it. Just get in. Wait for a condition you know repeats itself and execute. Job done. Euro pound, unknown someone. Good name. Very covert. Euro pound, again, nowhere for me at the minute. We're sitting sideways for 5 days. You're bang in the middle of a short range. Could go anywhere. That was a Boeing. Scares me when I get a Boeing now. So yeah, bang in the middle of nowhere. Do this, right? Everybody on Euro pound. Go on to Euro pound now. Go to 0.01. Risk. Hit buy or sell. Flip a coin. Go to Google and do a coin flip. Just hit the button, long or short, right? And deal with that 0.01. Deal with it. At some point in the next week, I can guarantee you'll be out of that trade if you take more 0.01s. Right now, why do you think this says 50 on RSI? Because it's halfway. Halfway between what? Going up and down. Where's it going to go next? I don't know. More likely to go up, because I know that these things here that I've got drawn on my chart usually turn grey. That's my logic. Simple as that. Stupid simple. It's more likely to go up than down, because in the past, whenever I've got blue lines drawn, they come down back into these blue lines and make them grey. If you want to simplify it down into baby speak, that's why I would hit the buy button now. Simple as that. I've no idea if it's going to do it or not, but that's what has happened previously. And usually when we get down to these lows, it normally goes up. That is the simplest logic I can boil my entire strategy down to. Hit the long button on the Euro pound, because it's more likely to go up than down. I have no idea, but I would expect it to. Which EA do I need to purchase? So market reverse alerts. It's all going along the bottom here, look. Right now, it says the mst.info/EAs. Market reversal alerts EA is the one that I use. Not the opening range breakout EA, no, sorry, Forex pips. That's this one. That's the, it takes the opening range break on the indices. Different strategy. Go and watch the videos on them. They all work. It's just you pick the one that you want. Would you have to switch off the EA on that pair if closing some trades and adding stop losses? On what? On the market reversal alerts, EA? If you want to add a stop loss, add a stop loss. The EA will only manage the trades that it takes. So if you add a stop loss after, then the EA won't manage that. If you want the EA to place stops, it would place stops, obviously, but the stop losses don't affect the EA. Stop losses affect your bank balance. If you put a stop loss in place, you will get stopped out most of the time. Look at breakout strategy. We were talking about breakout strategies this morning, weren't we? Who was it? Oh, it's this one, wasn't it? Euro pound. Someone this morning said, I'm going to take a break there. And I said, I wouldn't take a break there if I were you. If we get up to there today, it's 125 ADR. The chances of it coming down are high. Look at the statistics here. It's 23% chance. It's not going to go higher than that. We know that. We've back tested it. So if you go long there and take a breakout and you put a stop loss down there, one of two things is going to happen. It's either going to fail as a breakout and stop you out, or it's going to fail as a breakout and chop around, or it's going to move up into profit and do something. But your TP on a trade of that size, if it's a one-to-one, has got to be here. That is, from where we are there on price, 1.5 to 2 ADR away. It takes a long time to move to ADR, usually 2 to 3 days. So when you take that breakout, you're going to be sitting in worried pain for 2 to 3 days, hoping it gets your target. When you take that trade and it does that for 2 days, and then it finally moves up to here and then puts in a whacking great bear candle because there's been news, you're going to close your position. Your risk reward on that trade will actually work out at 0.5. You'll never make a profit out of that strategy because you do not let your trades run. Reason being, your trades have got very little chance of running there because the odds of it getting to there are very, very low. Again, remove that. And if this doesn't work out and it goes down to here, you can get in again and get out. Or if it moves up to there, you can just get out because there is no risk reward ratio you are being held to by your strategy. You get out when you have profit. I'm sitting at the moment in DAX in $600 of profit. Right now I can bank that and half my mortgage is paid. I haven't got to hold it because I need to get, because I've got a $1,500 risk on it, I need to get to $3,000 profit. I haven't got to wait for $3,000. I just bank it because it's in profit. Yeah, so again, started a good conversation, this, hasn't it, about David's strategy, but removal of that frees up that because you haven't got to do it. You know, risk reward. Look at the fib. If we put the fib on that trade, if I could put it the right way up, I can't even select it. There we go. No. So the risk reward on that trade, yeah, if you're getting in here, that's 1R. So to get a 1R return on that breakout of this range, you've got to get all the way up to there. If you want 1.5R, which is what you should be using as a very bare minimum on any strategy, whether it be mean reversion, trend, or anything, you've got to get all the way up to there. Look how long it's taken to get from there to there. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days. It took 12 days to get down there. So when you take that breakout, expect to be in that for 2 weeks to get a measly 1.5R return on your trade. Not for me. Fun, is it? Removes the fun of the job. Totally. Stop losses. Anyway. How much do you recommend we have in an account to start with? Whatever you want. Go and watch the Bootcamp Forex pips before you use it. Before you buy it. Just don't buy it for any reason, right? These accounts that you're looking at in here are $100,000 accounts. $500 isn't enough. It is enough, but you will be in a lot of risk. You're going to go into a lot of drawdown. Go and watch the bootcamp, understand the strategy before you try and execute it. Because if you don't execute it right, even with the EA, it won't work. You need to make sure you get it right. So watch the bootcamp. It's all on the website. So on the website, you've got the position trading bootcamp. That explains position trading in 12 hours when my website works. Yeah. Or get the PDF and skim it. If you want to skim the bootcamp, it's all there. It's 100 and I don't know how many pages. Where's the page count gone? I don't know. It's a lot of pages. It's a long course, right? So do the course, understand the strategy, understand why you're doing what you're doing and what it's doing for you psychologically. Then if you like it, try and trade it manually first, then get the EA. Or if you can't be bothered, just get the EA and let the EA trade it for you. But you need to understand what it's doing so that when you're looking at your P&L, even if the EA has executed trades, you understand what's going on. You've got to understand what's going on and why this is what it is. If you're trading a $500 account, you're going to be in much bigger numbers than this. Page count is in the right sidebar. Oh, yes, it is. You're right. There you go. 191 pages. A big PDF.